Welcome back to Market on Close. I'm Alex Coffey, now joined by Max Baecker, the president of American Hartford Gold, to look at some of the trends he's watching in the precious metals space, maybe a little Bitcoin talk as well. But let's start with a big one, which is kind of the move we've seen in silver. You know, you blink and it went from, kind of the low 30s to now pushing 40. When you look at the relationship between gold and silver, what does that tell you?
Yeah, it's having a big year, up 30% already. And, if you look at the relationship between gold and silver, typically it trades around 65 to 1, 65 ounces of silver for 1 ounce of gold. Right now it's at 89 to 1. So it's still, it's extremely undervalued right now. And as we see the dollar pull back, which it has this year, you're going to start to see, silver really charge up like we've seen.
I noticed in your notes you talked about younger investors, a younger demographic getting more involved in this space, not only in things like digital assets, which are tangential, but also through silver in particular. Why do you think that is? Is it the higher beta nature of it, the lower barriers to entry with the lower price point, a little bit of both?
A little bit of both, but definitely the lower barrier to entry. And then I think the younger generation does see the upside. We talked about the gold to silver ratio. They see a big upside there. And, gold and silver usually move in lockstep. And silver's a bit more volatile. But that being said, when the dollar is falling like it is, you're going to see those big moves upward like we've seen. So I think they see maybe more opportunity for gains in silver than they do gold right now.
Max, when we talk about that relationship, that gold to silver ratio, you said it's closer to 90 now. It's normally, or has been traditionally, maybe in the mid 60s. Is that a trade that you would look at? Is that something that you talk to people about rather than saying just buy silver, short gold in an equal way there to try to get that exposure? Or does it simply just say, hey, maybe shift sort of that allocation favoring silver if that was your kind of metric for decision making?
We're telling our clients to shift more towards silver right now. Again, just more upside potential at the moment. I think gold is consolidating a bit right now. And I think, there's the big Fed decision coming up in September. And we'll see what happens with that. But I think in every scenario, the dollar continues to fall. And so I think gold's going to do very well, but I do think silver has more room to run this year.
Let's talk gold and Bitcoin, because I think one of the very many narratives that surround kind of Bitcoin bulls, depending on who you ask, is that it could basically serve as this digital gold, or sort of this I guess investment against central bank risk, or whatever it may be. How do you see that conversation, and do you think there's any merit to it?
Yeah, I'm a fan of Bitcoin. I think you do need to have a little exposure to it, but Bitcoin and gold do two completely separate things. Gold is a store of value. It has been for thousands of years. It's the only asset on earth that doesn't have counterparty risk. It has value in the palm of your hand. With Bitcoin, digital gold, fine, but there's 5 or 6 barriers there for counterparty risk. You got to hope that there's electricity. You got to hope that there's someone there to buy the Bitcoin from you. You got to hope that it transfers, that you can sell it on your platform, that the platform will transfer it to a bank, that the bank's in business, that the fiat currency is being transferred. You see, there's all these barriers here for Bitcoin to really be that store of wealth that it claims to be. Again, I'm a fan of it. I think you should have exposure, but there's a reason central banks are buying gold up at the fastest clip in history. That's the bedrock of the finance world.
One of the big questions when it comes to Bitcoin is, if you've been skeptical of it and you weren't an early adopter, did I miss the move? And depending on when you ask that, you've been rewarded if you came to, whatever, I'll get involved. But I could make the same argument for gold when you look at its performance over the last couple of years, basically keeping pace with the NASDAQ, which is obviously impressive for a lower volatility instrument. So here's the same question. For those who weren't exposed to gold, skeptical or not, did they miss it? And is it ever too late to try to get exposure?
Yeah, I always tell people, if you think the government's going to stop printing money, then don't buy gold. If you think they're going to continue to print money and debt's going to continue to rise, then buy gold. So by no means have we missed the boat there. The dollar's still at, I think, 97 right now. Back in back in 2008 through 2011, the dollar fell to 70, and that's when gold really had its big rally. If we get any kind of market interruption, any kind of mild recession, the dollar will fall and gold will rise. That's why you're seeing, just about every major investment bank predicting $4,000 gold. We have some calls next year for $4,500 gold. It's just they see the M2 money supply since 2020, and they see a government that has no plans of stopping the printing.
One of the things that I've looked to for gold in short-term ways is sort of its way of, in a way, acting as a barometer for geopolitical temperature. So some of that's going to be maybe around the dollar and its security, going forward. But do you think there's any merit to that as well, or are you focused more on a longer term and try not to get too caught up in the shorter term, day to day?
With gold always looking macro, I'm really looking at the debt situation we have. Just top 37 trillion in national debt. We have $1 trillion in interest we're paying every year. We have a $2 trillion deficit every year right now. So I'm looking more at that. Since 2020, it seems like I'm sure just about every day there's something in the news that's something to worry about or something to be concerned about, and it's almost like we're getting numb to it at this point because there's so much going on. So I like to pull back and look macro and again look at the debt situation, the money supply situation, and that's really what I'm looking at gold and silver for at this point.
One thing, too, final thought here, Max, before we say goodbye, and you might have even more insight into this, but I watch gold, and it's almost like it goes into hibernation, but when it wakes up, don't get in the way, and it seems like maybe going back to 2023, maybe even 2020, depending on the time frame, it's certainly been awake, and it's been making one of its big macro legs higher. You talked about back in the financial crisis, something similar. Is that traditionally how we view the gold market? And it maybe doesn't do a lot, but when it does, it happens quick?
You nailed it. Gold is a very boring investment until it's not. And, it didn't do much, from 2010 up until 2020. And then all of a sudden it broke out, pretty serious. And it just, all the money printing we did, again, if you just look at an M2 money supply chart since 2020, you'll see why gold really came alive, why inflation came alive. But yeah, it's a steady insurance policy until we have some kind of crisis, and then it really, really comes to life. And that's what we've seen.
Good stuff. Max Baecker, president of American Hartford Gold. Appreciate the conversation.